Hey everyone, welcome back to Corporate Decoder. Today we're diving into a corporate oopsie that involves taxes, some accounting hiccups, and a company having to say, whoops, we messed up. So buckle up as we decode Acuren Corporation's recent filing. Basically, Acuren realized they made a mistake in some earlier financial statements. These statements are like the company's report card, showing how well they're doing financially, but they found an error related to how they accounted for income taxes, and that error was big enough that they had to tell everyone to not rely on the old report card. They're essentially saying, hey, those numbers we gave you before, yeah, those weren't quite right. The specific financial statements they're talking about are the unaudited or not fully checked, condensed, meaning shortened, consolidated financial statements from EIL last year. These financials were for a part of the company called Acuren Holdings Inc. and its related businesses. These are older financial statements, so this is not about something super current. So what exactly was this income tax error? Well, it seems like they messed up how they valued something called deferred tax assets. Basically, these are like future tax benefits that a company can use later on. But Acuren realized that they probably wouldn't be able to use all those benefits, so they needed to lower their value and record it. The impact of this error is pretty significant. It increased their total comprehensive loss by about $12.5 million. Total comprehensive loss is how much money the company lost after accounting for all sorts of financial activities. And because of the mistake, their loss per common share, or how much money they lost for each share of stock, went up by about 2.50. In other words, the company lost more money than they initially thought. Now, it is important to note that the mistake didn't affect the cash flow. This is basically the amount of money that goes in and out of a company. So while they misreported some things, they didn't actually find any missing money. The company said that they would restate or fix the old financial statements and put them in their annual report, which is their yearly report card, and also in an update to another document they had filed. This is a crucial step to fix the old mistake. Here's where it gets a bit more serious. The company admitted that they have weaknesses in their internal control over financial reporting, or ICFR. These are the processes and systems that companies use to make sure their financial information is accurate. Acuren said they didn't have enough people with the right skills and knowledge to handle the accounting properly. They didn't have enough people who could analyze, record, and disclose accounting matters. That's not good because it means there's a higher risk of making mistakes in the future. They've concluded the material weaknesses resulted in these errors, meaning this income tax error may have happened as a result of not having proper accounting. To try to fix things, Acuren's management and the audit committee had a chat with PricewaterhouseCoopers LE, who are the company's outside auditors. It's like bringing in a doctor to check up on things. The filing also includes a section on forward-looking statements. These are basically predictions about the future. Acuren warns that these predictions might not come true because there are a lot of risks and uncertainties. They also say they are not required to update anything that is stated. Oh, fine, now let's put all this together and see what it really means. Acuren had an income tax accounting error that was significant enough to cause them to restate previous financial statements. This led to them increasing losses. They've admitted that their internal controls over financial reporting aren't up to par, which raises questions about how well they are managing their finances. All in all, not a great look. Where does that leave the company? Well, there are a few things to consider. On the plus side, the company is trying to fix the mistakes. By restating the old financial statements, they're being transparent about what happened. They are also looking at how they manage the accounting. However, the internal control weaknesses are definitely a concern. If they don't fix those, it could lead to more problems down the road. The most important thing is fixing and improving these controls. Also, be aware that this means there may be some bumps in the road and potentially changes to future financial statements. Ultimately, Acuren is facing some challenges right now. It is important to see how things progress. Thanks for watching, and don't forget to like, comment, and subscribe for more corporate deep dives.